Monetary Metal Masters. Quick heads up, this is not financial advice. Silver just had its wildest day since 1980. On January 31st, silver dumped 31% in a single session. Gold fell about 12%. That wasn't a structural failure. We are at a critical junction. Now let's break down what this actually means. First, the liquidation. Second, India. Third, central banks. Fourth, hype. It was a leverage wipeout. Here's the setup. Margin calls hit. Month-end positioning stacked. Weekend cutoff trapped traders. Exchanges hiked requirements. Shanghai raised speculative margins to 11% and tightened limits. Algorithms did the rest. VAR compression. Forced liquidation. Thin books. Positioning reset. By February 11th, silver's back around $82 to $83. That level matters. Now the bigger shift. India. Starting April, silver becomes official collateral for loans. You can pledge up to 10 kilograms of silver for a loan. Ticket sizes up to roughly $3,000. The implied monetary reference is 10:1 versus gold. The global spot ratio is still north of 71. Translation: institutional recognition, not just jewelry demand. Sovereign signal: central banks are still hoarding gold. Forecasts point to roughly 755 tons in 2026. We just saw massive quarterly totals, around 220 tons in Q3. When balance sheets rotate into hard assets, that's hedging monetary risk. Hype check: AI price calls are everywhere. Conservative outputs peg late Feb silver around $86, not $300. Some human analysts see 175 plus if the structural story plays through. Physical squeeze: in 1 week in January, about 33 million ounces were pulled for delivery. Roughly 26% of registered COMEX inventory gone. China reclassified silver as strategic and tightened exports. Emerging market central banks are stacking. That fragments supply and lifts the floor. So what does this mean for miners? They're operationally leveraged to price. If silver stabilizes above $75 and pushes toward $100, revenues scale faster than costs. Margins expand if AISC stays in check. Free cash flow inflects. Debt gets retired faster. But quality matters. Controlled dilution. Stable jurisdictions. Manageable debt. Flattening cost curves. Technicals and tape. $74 support. $88 breakout. Volatility compression. Cost stabilization in quarterly reports. If structure holds and sentiment resets, miners can move 2 to 5 times the metal in late Phase 2 into Phase 3 acceleration. If it breaks, reassess fast. I want signal, not noise. Tap follow. Like this. Hit the link in bio to see what I'm tracking. Prepare. Position. Preserve.